Okay, so the world of crypto trading, right? You hear these stories, overnight fortunes. It can be seriously tempting.
Oh, absolutely.
Yeah.
But then you throw in this thing called leverage.
Exactly. And suddenly those potential gains and, well, the potential losses too, they just get magnified hugely. You really need to know what you're doing.
hmm And that's precisely what we're going to unpack today. We've got a really interesting source. It's a transcript from a YouTube video.
Right, someone actually walking through live crypto futures and options trading.
Yeah, on the Delta Exchange platform specifically.
And one of you actually pointed us towards this. You were keen to kind of demystify Delta Exchange and really crucially get a solid handle on what leverage is in crypto.
So yeah, our mission today basically is to cut through the noise, pull out the key stuff.
Give you the practical steps if you're maybe thinking about using Delta Exchange.
But even more than that, really break down this concept of leverage. It's powerful, no doubt, but it can be seriously risky too.
Think of it as the quick guide, yeah. Getting the essentials without watching the whole demo.
Exactly. And our source is just this transcript showing it happen in real time.
Okay, let's dive in. First things first, if you want to trade on Delta Exchange, step one is you need an account. Seems obvious, but yeah.
That's the starting point. In the video, it mentions a referral link in the description. It says it gives you a 10% discount on trading fees.
Ooh, nice little perk.
Yeah, and interestingly, the presenter also mentions that using that specific link might get you UPI access for adding and withdrawing funds right from day one.
Okay. Depending on where you are, that could make things a lot smoother.
Could do, yeah. Seems like a potential benefit.
Now, like pretty much any trading platform these days, there's KYC, right? Know your customer.
Yep. The video lists the usual suspects. Aadhaar card, PAN card, and you got to take a selfie for verification.
Standard stuff. But the good news, according to the demo anyway, is that it's quick.
Apparently, yeah. Like 2 or 3 minutes once you have your documents ready.
So no waiting around for days, hopefully.
That's the claim. A bit faster than some old school places, maybe.
Okay, so account's open. Next up, get the app, I assume.
Available on Google Play for Android, iOS App Store for Apple. Standard download.
And logging in is just email, the one you registered with.
Yeah, simple as that. Just use your registered email ID.
All right, logged in. Now, where's the action? Where do you find the trading stuff?
Okay, so the video points you straight to the markets option in the app. That's like your main hub.
Gotcha. Markets.
And inside there, you'll find, well, quite a bit. The focus in the video is on crypto options and futures.
Right.
And for futures, they highlight these things called perpetual contracts. They have them for loads of cryptos.
Not just Bitcoin and Ether.
No, the big ones are there,
Yeah.
obviously, but also even some meme coins, apparently.
Wow, okay. So quite a range.
Definitely. And within that markets section on the phone app, you'll see tabs, right, for options, futures, and also a watch list.
Makes sense. Helps you organize. Okay, let's get into the meat of it. Trading those futures, these perpetual contracts you mentioned.
Right, the ones without a set expiry date. The presenter uses Bitcoin Perpetual as the example. Very common one.
And they talk about the price chart.
Oh, yeah, big time. They really stress how important looking at the chart is before you trade. Makes sense, right?
Absolutely. You need some idea where it might go.
They even mention having other videos on chart analysis.
Yeah.
Like multi-time frame analysis. Maybe a new one coming out.
So they definitely push the technical analysis side of things.
Seems fundamental to their approach, yeah.
Okay, so you've looked at the chart, maybe you have a view, then you've got the buy and sell buttons, panels, whatever they call them.
That's where you execute. And this is where it gets really, really interesting. Leverage.
Ah, yes. The magic word. Or the scary word, depending.
Both, probably. So the video notes the default leverage might be something like 5x 5 times.
Okay, reasonable start, but...
Delta Exchange apparently lets you ramp that up, way up to 200 times leverage.
200 times? Seriously, that's massive.
It's huge, and potentially hugely dangerous if you don't get it. The video uses a great example to show how it affects your margin, the actual cash you need up front.
Okay, walk me through it.
So say one lot of Bitcoin Perpetual costs $80, right? $80 of your money, no leverage.
Got it. $80 for one a lot.
Now add 10x leverage. That same one lot now only needs $8 of your capital.
Wow. Okay. Big difference already.
Huge. And now go to the extreme they offer. 200x leverage. That same lot, you only need 40 cents. $0.40.
40 cents to control an $80 position.
Effectively, yes.
Yeah.
You're controlling that $80 value with just 40 cents of your own margin. It's like, a tiny lever moving a massive weight.
That really paints a picture. And they show how it scales up too, right? With a bigger account.
They do. They use an example of having $1,484. Without leverage, that buys you 18 lots.
Okay, 18 lots.
With 10x leverage, that same $1,484 now controls 182 lots.
Whoa!
And, wait for it, with 100x leverage, that $1,484 lets you control 1,678 lots, 1678.
Good grief. The amplification is just staggering.
It really is. It means you can take these massive positions relative to your starting capital, positions you just couldn't touch otherwise.
Wow. And it's a huge butt, isn't it?
It's the biggest butt. This power, it cuts both ways, sharply. It's a double-edged sword, like the presenter says.
Yeah. They give that numerical example, which is super helpful. Let's break that down.
Okay, so imagine you have 1,000 rupees, 1,000 euro. The thing you want to trade costs 100 euro per unit.
Right. So no leverage, you buy 10 units. Simple.
Exactly. Price goes up 10% to 110. Your 10 units are now worth 1,100. You made 100 in profit.
Which is a 10% return on your 1,000. Decent.
Decent, yeah. Now, same euro capital, but slap on 100x leverage.
Okay.
Your L euro now effectively controls 1 lakh worth of the asset. At euro per unit, you're now controlling 1,000 units, not 10.
Right. Huge difference in position size.
Now, same price move. Goes up 10% to 110. Your position is now worth 1.1 lakh.
Okay. So the profit is?
10,000 rupees. 10,000 profit on your initial euro 1,000. That's 1,000% return.
1,000% from a 10% price move. That's the allure, isn't it? That massive potential gain.
That's absolutely the hook. But here's the critical flip side. Same 100x leverage, same OLAC position.
Oh.
Price drops, but not by 10%, just by 1%. One single rupee, down to 99.
Okay.
On your 1 lakh position, that 1% drop is a euro 1,000 loss.
Your entire starting capital.
Wiped out. Gone. From a tiny 1% move against you.
That's terrifying, actually.
It highlights the risk perfectly.
Yeah.
And that's why the exchange has automatic liquidation.
Right. They step in to close your trade before they lose money.
Exactly. They protect themselves. So the presenter is, like, really strong on this point. Do not use high leverage.
Yeah.
Especially if you're just starting out.
What do they suggest then?
Very cautious. Maybe 10x or 20x max if you really know what you're doing. For beginners, maybe just 5x. Or even less, just to feel it out.
Get used to how quickly things can move.
Precisely. Manage that amplified risk above all else.
Okay, so say you understand the risks. You've chosen your leverage level carefully. How do you actually place the trade? The video shows a market order first.
Yeah, a market order. That means you're saying, get me in now at whatever the best current price is.
Immediate execution.
Pretty much. The demo shows selecting Bitcoin, setting leverage. They use 10x for the example, hitting buy.
And choosing the quantity, like 1 lot.
Right. And it shows the cost, remember. $8 with 10x leverage versus the $80 it would be without.
And when they hit buy, it just fills instantly.
Almost instantly, yeah. And you often see like a tiny loss right away.
That's the spread, right? The difference between buying and selling prices.
Exactly. The bid-ask spread shows how quick market orders are.
Okay, so you're in the trade, now managing it.
Yep.
Setting profit targets and stop losses.
Super important. The video shows an add option after the trade is open, lets you set those levels.
Like, say, aim for a 5% profit, but cut your losses if it drops 5%.
Yeah, something like that. They put in specific price levels for a target profit and a stop loss. It makes the exit automatic if those prices are hit. Takes the emotion out, kinda.
And if you just want out manually, before hitting profit or loss targets?
There's a cancel option or maybe close. You can click that.
And you can choose to close at the current market price.
Yep. Effectively another market order to get out.
Yeah.
Or you could use a limit order to try and exit at a specific price you choose.
Ah, okay. Which brings us to limit orders. How are they different?
So unlike market orders, which are immediate, limit orders give you price control. You set the exact price you're willing to buy or sell at.
So if you want to buy, but only if the price drops to a certain level.
Exactly. You set your limit buy order at that lower price. It'll only execute if the market actually reaches that price or goes lower. Same idea for selling, but in reverse only executes if the price goes up to your limit or higher.
So you might not get filled immediately, or maybe not at all if the price never hits your limit.
Correct. That's the trade-off. Control over price versus certainty of execution. The presenter shows setting one, say, at 82.74. Just as an example.
And the benefit is getting a potentially better price.
Better price, yeah. And sometimes platforms offer lower fees, for limit orders because you're adding liquidity rather than taking it like with a market order.
Okay, makes sense.
Yeah.
Now, we absolutely have to circle back to this liquidation price thing. It sounds critical with leverage.
It is critical, probably the most important concept with leverage. The video explains it using a short sell example too.
So betting the price will go down.
Right. And if you're short, you lose money if the price goes up. The liquidation price is where the exchange automatically closes you out to stop your losses snowballing.
And leverage drastically changes where that point is.
Massively. The demo showed with 10x leverage on a long trade, betting on price going up, the liquidation price was, quite a bit lower than where they entered.
Giving you some breathing room if the price dips a bit.
Exactly. Like the market was at 80,000, liquidation was maybe 72,544. There's a gap.
But then they cranked the leverage up to 50x.
Yeah, and watch what happened to the liquidation price. It shot up alarmingly close to the entry price.
How close?
Like market at 80,000, liquidation might jump to 79,000. Almost no room for error.
Wow. So even a tiny wobble against you and boom, you're liquidated.
That's exactly it. The higher the leverage, the tighter that liquidation margin becomes. A small adverse move can wipe you out completely.
It really shows the danger. Higher leverage equals much higher chance of getting liquidated fast.
It's an inverse relationship. More leverage, less room for the price to move against you. It's a stark warning in the demo.
Definitely something anyone using leverage needs to understand inside out.
Okay, before we wrap up, the video quickly touches on options trading too.
Just a glimpse, yeah. There's an options tab in the app.
And what's available there?
Looked like Bitcoin and Ethereum options at the time of the video. They showed different expiry dates too.
Like weekly, monthly?
Even daily ones, apparently. Expiring at 5:30 p.m. So, very short-term possibilities.
And you see the calls and puts. Yep. Calls on one side, the right to buy. Puts on the other, the right to sell. They clicked on a specific Bitcoin call just to show it.
But they didn't go deep into strategy or anything?
No, not at all. In fact, the presenter specifically cautioned that options are way more complex than futures, need a much deeper understanding.
Fair warning.
They even hinted maybe they'd do a dedicated video on options if people were interested.
Okay, something for people to look out for, perhaps. Or maybe a future deep dive topic for us if you're interested. Let us know.
So let's quickly recap what we pulled from this demo transcript. You need an account. KYC is standard. Process seems quick.
App interface has markets, futures, options tabs, lots of perpetual futures, even for meme coins.
Leverage is the big one. Default might be 5x, can go up to 200x. It drastically reduces the margin needed.
But massively increases risk. Small moves against you with high leverage can trigger liquidation, wiping out your capital. Understanding that liquidation price is absolutely key.
Right. Start low with leverage.
Right.
Very low. Or none at all, especially at first.
Yeah.
Market orders are fast. Limit orders give price control.
You can take profit and stop loss orders to manage trades, and options are there, but they're complex. A whole different beast.
That pretty much covers the essentials from the video walkthrough.
And the core message, loud and clear, if you do decide to try futures, be incredibly careful with leverage. Start small, learn the ropes.
Definitely. The crypto markets are volatile enough without adding massive leverage on top if you're not prepared.
So yeah, we hope this breakdown of the Delta Exchange demo gives you a clear picture of how it works, and especially the power and peril of leverage. If you want to check out the platform, maybe that referral link from the video is a starting point for your own research.
Yeah.
And that leaves us with a final thought for you to chew on, considering everything we've discussed, the potential for huge gains, but also the very real risk of rapid, significant losses. Especially with leverage, what level of risk actually makes sense for you? What aligns with your own financial situation, your goals, and honestly, your stomach for volatility in this crypto world? Something really important to think about before jumping in.